It's been a crazy week. But it seems to happen every sort of 10 or 15 years. We get this crazy dislocation in the nickel market. So it happened back in 1989, again in 2007, and again this week. And when we get these extreme moves and markets go into backwardation from contango, it seems to create these events. So not one-off, but certainly multi-decade events. But when they do occur, they're big, and this price spike is just extraordinary. The last price spike we saw was $50,000 back in 2007. That seemed to be an extraordinary event, and we've now doubled that. So price moves will revert to norm at some point when the LME starts trading again. But the last week has been very uncharacteristic.
Pete, Rocky, Will here. In terms of what we did see, though, this seems to be an issue that was generally caused by the fact that Tsingshan was overextended in what they were hedging. And then at the same time, they don't necessarily produce the right kind of nickel anyway in order to back up those hedges. But doesn't this go to a bigger problem of a lot of the speculative activity when it does come to commodity trading? Because it's not as transparent as people think.
Yeah, look, it does. And we've seen just in the last week, it's not just nickel, it's also coal. US coal, Peabody coal are exposed on derivatives in the coal market as well. So it's across the board in commodities. When you get these extreme price moves, it starts to exacerbate that. But, Will, your point is important in nickel. There's different types of nickel, and Tsingshan specialises in Class 2 nickel, which is the lower quality nickel, not the Class 1. And they've been trying to talk down the Class 1 price for some time, going back to last year. So, again, they've been able to roll their positions typically on a monthly basis, so using the contango in the forward curve, and that's come unstuck in literally just the last couple of weeks. So it's not a demand-supply issue or a market balance or market tightness. It's certainly financial, and that will run its course, but at the moment it's extreme. So will we see more in the broader market? Potentially, but this one, it's big. We're talking about an $8-9 billion impact on Tsingshan, so it's big in dollar terms and big in nickel terms. It's a 200,000-tonne position, so large in terms of the market as well.
Right, and whether it's in China or whether it's over in Europe, it seems to be about squeezing out the speculators, shaking out the speculators. Are we going to see tighter margin requirements, and what does that do for price discovery in the broader market, Peter?
Well, the LME should be the ultimate price discovery market. It's a transparent market. It trades every day. We get a window on price and we can see it on our screens every day. It's not like some of the battery metal spaces where we don't get that discovery. So we have in the current framework the right price discovery, but this extremes of pricing and the nuances of forward markets, contango versus backwardation, it's certainly making it hard at the moment. So the LME being closed, is that the right thing? Probably not. We should just let it run its course. But the other driver here is what happens in Russia and Ukraine, how that affects the supply and demand balance, and how Tsingshan ultimately gets funding to cover this short. So it will play out, but in the near term, the very near term, it's certainly extreme.